Good evening, traders. Today's Tuesday, January 31st, 4:10 p.m. Markets are closed. The eve of the FOMC Super Heavyweight Showdown. Tomorrow, I've got a good show for you guys. Tonight, I'm going to show you examples of how to play the FOMC tomorrow. And I'm also going to show you how to know if market makers plan on taking it down or taking it up tomorrow. I'm going to show you the results of the December 14th, 12/14 FOMC MACD pattern, as it already on 12/14 gave the signal of what it was going to do. It gave a tell what it was going to do before the 12/14 FOMC 2 to 2:30 press conference. Okay, then we're going to get into some intraday charts, what happened today, and some air quotes coincidences with the previous 12/14 FOMC. You know I don't believe in coincidences, and neither should you. And then finally, we're going to get into some more of the intraday tweets, some important tweets. Not every single tweet that I did today, but the important ones. Okay? In case some of you actually have a life and don't get on Twitter during the daytime. All right? So, okay. All right, here we go. Actually, what you're looking at right here is from the September 21st FOMC. Okay? Now, this is how to play it. The next slide also shows you, I've shown this in previous episodes, but I'm including it here in case you don't, I'm not going to make you go through previous episodes. It's basically you're playing a head fake. How to avoid getting head faked. Okay? Now, for you scalpers, you're probably going to try to get on the first move. My style is more of, no, I'd rather catch it on the second move. All right? I don't scalp the first move because I have no idea what the very first move is going to be. Okay? So, in this example, let me turn on my pointer. Okay, so in this example, here's the first, look at the RSI. Here's the first peak right here. So on September 21st, markets went down, but it came back up and made a higher high. Unfortunately, RSI did not. That's your cue to get puts. Okay? That's basically what it boils down to. It boils down to RSI more so than the MAC. Oh, actually, this is MACD at the time. I had my MACD looking kind of different back then. And actually, this is Chaikin Money Flow. But I'm going to be looking exclusively at RSI. I'm not really going to look at MACD, even though this one looks quite different than the way I have the MACD now. Okay? I'm looking exclusively at RSI. I need two humps, essentially is what we're saying. You need two humps to make a objective comparison. All right? So, since this is the 5 minutes chart, you're talking about waiting 5, 10, 15, 20, 25, 30, 35, 40, 45, 50 minutes, an hour. Okay? It could take that long. The reason why I'm willing to wait that long is because, well, first of all, if you get it in at the right time, now you have the more permanent move, as was this, in September. This is the permanent move, right? You don't have to subject yourself to the gyrations. Now, if you're a scalper, okay, sure, just down and then up, that's fine too. But I'm not planning on scalping it. I'm planning on getting the permanent move. So, all right, that's basically in a nutshell. This to the right hand side here is a 30-minute chart. But obviously you can see that here. This is pretty big divergence as well. Even though that clearly went way high, that's like that's not following. That's not following. So that's another. So this is the 30-minute, and then the left hand side is 5-minute. Okay. So next slide, same thing. I've shown this slide in previous episodes. How to avoid a head fake. Let the first pump happen, and then let the back test happen. Let the second pump happen. 1 is higher than 3 on the price. However, 1 is lower than 3. 3 is higher than 1 on price. Unfortunately, 1 is higher than 3 on RSI. Okay? So that's how you can play FOMC. All right? So that's basically all I got for you there. Okay, here we go. Now, let's just get straight to the point. I tweeted this right here. Also kind of important. There was bearish MACD divergence on 1214 leading up to FOMC. On the 1 hour chart from overnight, actually, pretty much all from the day before the CPI. It was just going down, 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 down. But it tried to come back up as it got closer to FOMC. Unfortunately, this was a lot lower. You know, there was bearish divergence, even though it tried to come up. See, look at that. Look at the price going up. MACD was not following. That's how you know. That's how you know market makers plan to take it down at 2 p.m. or 2:30 p.m. Right? 2 p.m. they're going to release the numbers and a press statement. But then 2:30, Jay Powell steps to the mic, and then you know what's going to happen after that. But essentially, watch overnight and morning. Watch for bearish divergence. If you see it, I expect actually tonight futures kind of just float up a little bit. I expect tomorrow kind of to be up, right? Markets aren't going to give you a clue as to if there's a problem. So they're naturally going to kind of float it up. Okay? But if you find that the MACD is not following, they're going to take it down. Most likely. All right? Okay. So, and this will blow your mind. Why is SPY flattening out here? Right here. That's specifically what I was referring to. Right here. Why was SPY flattening out right here at 403.67, this pink line? Oh, 403.64. Okay. This goes back to the 1213, 1214 CPI. Right here, guys. The same pink line. The same 403.64. At the time I took the screenshot, SPY was 403.67. Okay, 3 cents off. It doesn't matter. Look at this. Look at this. Pink line. Look at what FOMC did on that day. This is a 1 hour chart. Look at that. The day before, look at that. Look at the 1213 CPI. As it came back down, the wick kissed that perfectly. Look at all these wicks. Kissed it, kissed it, kissed it. And look what it did today. It hugged that line. See? I was calling that out, guys. So, as of close today, we are officially over. Higher level, 405.95, or whatever I took the screenshot. We're higher today than the FOMC was on 1214. Okay? We're not quite to the 1213 CPI yet at 414. I have a feeling it's going to get there tomorrow. We'll see, though. I think those spikes are going to be so huge. I think it's going to get there. 414. But we'll kind of have to see. We need to let the data play out. Kind of play out throughout the day before 2 p.m. All right? So, that's all I wanted to show you. That pink line today, that right here was hugging against. Here's the same pink line on 1214 and 1213. Look at that. Coincidence? No way. All right, next slide. Blow your mind, part 2. Do you see the red, blue? Yeah, I'm sorry, red, blue, red. Band right here. Red, blue, red. This is today's chart, guys. This is today's chart. Guess what? That's the same intraday chart that goes back to 1213 and 1214. How do you like that? Okay? All of these, quote, coincidences. Are they really? So, something to think about, isn't it? Okay. All right. Basically, here's the 5-minute chart. What happened all day today? I mean, I'm not going to go blow by blow, but what we're going to do is get into some important tweets. Okay. Essentially, as I pointed out in this morning's episode, look at that. It came right on down here to the bottom. Actually, well, technically, this is not the weekly expected move. I put the number 384, but it says 398. That's not right. It's not to scale. 384 is just too far down there, and I don't want to show it because then it will scrunch the screen too much. So that's technically not where the weekly expected move was right here on this green line. But it came down on this channel, blue line right here. See that? See the blue line? Oh, I don't know what this is relative. Is that the midline there? No, that's the top of the line. So that's probably the, okay, so that's the fourth, the third, the 3/8, the 3/8, the blue line here, the 3/8 blue line. So, nonetheless, came down, found support at the 3/8, came up, found support on the, came up through the 4-hour EMA 50, then it came up through the 4/8 matrix 2011 line. Then it came on up through the weekly EMA 50, and then boom. Okay, that's basically all she wrote. And remember yesterday I talked about wicks, big wick. Oh, what happened here? What happened here? By the way, this was before. This is around 8 a.m. 30 minutes before any of that economic data was coming out. You bet they knew what it was going to be, guys. You bet they knew. Didn't I point out some huge wick yesterday? Yeah, go figure. That's what I'm talking about. No coincidences, guys. No coincidences. Okay, interesting. Once again, this is important. I'm going to start from now on. Okay, I've seen now every single time, every time you get a pump in the pre-markets, it always comes back to backtest the 5-minute EMA 50. Every single time. It's right here. Right here. It pumped up some more, but it's got to come back and touch that EMA 50. It's got to do it every time it does it. So, actually, from now on, when you see a big pump, just give it a good 30 to 45 minutes after opening bell. Because it's going to come back and touch that EMA 50 line right here, and then it's going to take off. That's actually quite important, guys. It's actually important. Okay? I've seen this every time now, so now I'm starting to clue myself into it. I can show you other screenshots if you want me to prove it, but trust me, it does it every single time. Every time. Every time. It's got to come back and touch that 5-minute EMA 50. It has to do it intraday. Okay? So, that pays to be patient, is what I'm saying, right? Okay, so once back tested, boy, did it rip on past that band, didn't it? See, it was struggling at the band earlier before it back tested, but once it back tested, what happened? Boop, bye-bye. Okay, that's all that's saying. Oh yeah, you see this pink line right here? I don't have it drawn around. You see this pink line? That is the must break lower highs line. Remember, it was going down for a couple days. That pink line, once you break it, oh, you're making higher highs. Okay, there's your trend line that I said I would never draw. And by the way, P.S., this isn't a bearish hangman candle. Just saying. Like someone we know by the name of Ron Walker, who 4 days ago says, well, this is a bearish hanging man candlestick reversal bar. It's a bull trap. It's a bull trap. And oh, by the way, 2 weeks ago he said, well, this stock market peaked. The stock market's going to peak next week. You know what's coming, guys. You know what's coming. Give me a break, man. All right. Now, at some point I did see slight bearish divergence. But with the RSI at 86, it could absolutely still curl up and invalidate the bearish divergence. Keep an eye out for that. That's important. Because actually it did that. It let's see, where were we? Yes, here. When I made that tweet, we were about right here. But with RSI at the time still at 86, and I'm like, woof, man, that's not the risk of going down. I'm not seeing it going down. So we held on. And yes, it did. See, it starts to curl back up. See what I mean? It starts to curl back up. So that's the key. Bearish divergence can be invalidated if the MACD starts to curl back up, provided that on the 1 hour RSI, it stays strong, like 85, 90, 95. Okay? Okay, so here we go. Yeah, there's the MACD curling up to possibly invalidate the bearish divergence. RSI kept going up to 93.77. I don't know if that's clear enough. Let me check it out. Let me see if that's clear enough. Probably. It's a little blurry. But it was 93.77. Trust me. It was just, I was like, oh, here we go again. Okay? Here we go again. All right? So basically, as we got actually when it was right in this phase right here, which would have been right here, yeah, right here. Yep, when I made this tweet right there, I said, yeah, I'm gonna hold the rest of my calls tomorrow, guys. I believe futures will be slightly up tomorrow AM, slightly up, and then I will close my calls near 2 p.m. and reset to $0 for FOMC trading. Okay, I am not going to hold anything coming into the 2 p.m. hour. I will close it because I think the swings will be so violent in both directions for the first, who knows, 15 to 30 minutes. It's going to be so violent. It's for the more of a scalp trader, and I'm not gonna play the scalp trader mode tomorrow. I'd rather play the permanent trend mode, right? Because then you could, because whichever direction it picks, oh, you know it's going to be followed through the next day, right? It's not just going to, rocket up to 421 and then crash down to 384 the next day. No, I don't think so. Once it picks a permanent direction, once it gets to the second hump, it's that direction is going to be permanent. It will be. It's not going to be up one day, crash the next. You're either going to go down and then you're going to follow up with a down day the next day, or you're going to go up and then follow up with an up day the next day. It's going to be that significant of a move. FOMC is going to be significant, guys. Significant. It's going to basically put an exclamation point on the rally, whether it continues or whether it ends. Okay? So all eyes on RSI. RSI. All right? And basically this is just the 1 hour chart. The data is kind of scrunched in here because I'm trying to show you 426 is the weekly expected move on the upper end. 384 is the weekly expected move on the lower end. This 388, that is the hive. That is the hive. Okay? If for any reason it goes down, you cannot lose 388. That ultimately is where the buck stops. 388. Okay? That's where the buck stops. Now, if you just look at these bands, right? Here, let's zoom in a little bit. 399 to 400. Oh, that's stiff. That's pretty tough. That's pretty tough band of support there. So let's just go the downside route because it's easy to talk about the upside, but let's talk about the downside. Where could you expect for it to find support? I expect the magic numbers to be pretty much 400, right in this range. Is it going to find support at 400? It's going to try to find initial support at 404, but it's pretty much closed at 404. So, I think the move is going to be too vicious. It's going to try, if it goes down, it's going to try to find 400, pretty much right in this band, right? Okay. If it can't find that, I think the next big one is 396. Okay, that's the half channel. Okay, And if it can't find that, I think it's going to go down to about 392 range. And then if it can't find that, you got 388, the hive. I don't expect the hive to just give that up. Okay, so you've got to be careful. If it goes down there, just because it hits 388, it doesn't mean it's just going to slice right on through it. No way. In fact, I would anticipate the market makers, being the market makers, to take it down just below it and then potentially rip it back up, trapping you. Bear trap. Okay, this is just to the downside. Okay, now you want to talk about upside? I think 414, that 1213 wick high. Oh, that's a very reasonable target. Sure, why not? We're not that far away. Question is, does it hold? See, that's all kinds of questions, isn't it? All kinds of questions to the upside. So here's the gray channel. I forgot to point that out actually in the previous slide, but here it is. This is the old gray. It closed right there. It kissed it at close. It kissed it. So that's what I think tonight. It's going to potentially consolidate just underneath of it all night. See, this is, here it is. It's kind of a slight upward incline. I think it's going to consolidate under it all night long. I don't think it's going to be doing some crazy, oh, up, down, up, down. No, 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 no. I think it's just going to consolidate. It's going to float up a little bit all night long. It's going to follow this gray trend line. This is for you newer viewers, this gray trend line. This gray trend line goes all the way back to the October 13th wick low. And it is the old November, December rising channel that no other YouTube channels even knew was there. Okay? And there it is right now. So the significance, the symbolic significance of what you're looking at right now is this. If the outcome is favorable tomorrow for the upside for the bulls, basically what you're saying is you are back in this rising channel that started back on October 13th. I'm sorry, yes, October 13th. You are at the bottom of that channel that you lost in November and December. You have now returned to this rising channel that you started on October 13th, the hive, but you lost it in November, December. You lost this gray channel, but now you are back in the original rising channel that no other YouTube channels even knew existed in November and December. Nobody. But I had episodes that called that out 2 months ago. Okay, that is the significance of tomorrow. Basically, to me, I see this as, do you stay in this rising channel, this gray rising channel, or do you fall out of it? It's binary, yes or no question. You're either going to stay in the channel, or you're going to fall out of it. And that's it. Okay? It really boils down to that. That is the question. Right? So, yeah, here's your weekly expected move, 426. Woo-hoo-hoo-hoo. Yeah, I don't know about that. That's way up there. I mean, that's way, but you guys keep in mind, I said in previous episodes, this gray channel top, 420, that left a gap there on August 19th, guys. Is it going for that gap too? See, a lot of open questions I don't know the answer to. I'm just kind of pointing things out, let you know what to anticipate, or maybe some questions that you could ask yourself. So I have no opinion as to any of these levels. Yeah, I have no opinion as to what they're going to get to or not get to tomorrow. You know, all I can say is we are going to find out. So you guys can feel free to debate that amongst yourself in the comment section, what level you think it's going to go to. But so I'm agnostic to whatever. If I start seeing bearish divergence, well, I'm going to call it, I'm going to start getting in the mindset of getting puts I mean, if I see bearish divergence, it's bearish divergence. I'm not going to see bearish and call it bullish. Okay? So that is basically all I've got for you guys today. Please feel free to follow me on Twitter, where I do a lot of real-time tweets calling the game as it is being played. And don't forget to listen to your favorite music as you are trading. Helps you get into the right state of mind. Helps you achieve your flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. And with that, I'm Agent 000 signing off.